billionaire real estate investor Sam Zell is buying even more gold. So, this week on another Bloomberg interview, Sam Zell talked about how he is worried about the dollar, how at his real estate businesses and the other businesses he owns, costs are rising. He's worried about inflation and stagflation. He's worried about the long term health of the dollar and all fiat currencies. And he even publicly admitted that he's buying more physical gold. Now, I don't know if he's buying a lot more gold miners yet, but I've covered this in the past in the last couple years that he also admitted, I think it was in 2019, that for the first time in his life, and he had never bought gold or gold stocks before, he was buying both. And a lot of this has to do with valuations. So gold stocks are actually very, very cheap right now. For gold and silver prices, it looks like the correction that started in the first week of September 2020 may finally be over. Gold prices are now well above 1800, and it appears that dips are now being strongly bought, and silver prices are now well above $27. And despite paper price smashes, the price action is rallying pretty strongly after paper price smashes. So the hedge eyes, the Keith McCulloughs of the world that are saying gold is going to crash again, it looks like they may be wrong. Look at all the other commodity prices, and yet over the last 9 or 10 months, gold prices and silver prices have lagged all the other commodity prices. And a lot of that is because of paper price manipulation. You cannot have a commodities bull market without gold and silver also going up. But here in the US, where paper price manipulation is allowed, and large bullion banks like JP Morgan are only fined $928 million for one type of manipulation, spoofing, where they make many billions of dollars per month in paper price manipulation on gold and silver. It's basically legalized, and they only pay a small fine relative to profits. But in terms of valuations for asset prices, the gold stocks and physical gold and silver are very, very cheap compared to the general stock market. You have the S&P 500, the average PE ratio is well above 30. I think it's above 38 now, and that is for stocks that have had an enormous amount of artificially cheap and subsidized share buybacks, thanks to Federal Reserve and other central bank policy subsidizing cheap debt, also Wall Street subsidizing cheap debt. And so if you remove those share buybacks, the PE ratios on these large cap companies that have no growth, they're not growing their revenues over the long term. You're paying just insane valuations of well over 40 times earnings. For many large cap companies, you're paying for a dividend yield. A lot of people are desperate for income out there with no growth. And the company still has a lot of debt on the balance sheet that's going to have to be taken care of at some point, unless it gets wiped away. Or more likely, the corporate executives, it's not going to be their problem because they're going to golden parachute out with their stock options before it becomes a problem in the coming years at the company's balance sheet level. So you have all these asset prices just insanely being inflated, but gold, silver, and gold stocks. So valuations, home prices here in the US, they've gone up enormously. Bond prices have been inflated by the Fed and other central banks. And then you have stock prices that I already talked about, especially for large cap stocks with no growth. And then companies that are unprofitable technology index, those stocks are finally, those market leaders are finally starting to sputter out. Now we'll see if they crash. They've been in a pretty substantial correction recently, but we'll see if there's an even larger crash of more than 50 or 60% in the not too distant future on those market leaders. But if you take a look at the chart of what I put for gold stocks and free cash flow growth, they have an impressive free cash flow growth. Now, we have to watch with oil and energy input costs. Oil has rallied, so over the coming quarters, it'll be interesting to see what happens to margins, but it does look like the correction in gold stocks is over, and hopefully Sam Zell is buying gold stocks here because your Newmont Minings, your Kirkland Lake Golds, your Agnico Eagles, the quality gold miners, your larger royalty and streaming companies, those stocks are still cheap. A lot of those gold stocks are still being priced as if gold is still only $1,500 an ounce. Those are the type of cheap valuations you're getting. And relative to profit margins on that valuation metric, there was a chart going around in the last month or two. Gold miners have the best valuation relative to profit margins of any industry including healthcare stocks and other stocks which are also making a lot of money. So if an astute billionaire and investor like Sam Zell, who up until a couple years ago never bought any gold or gold stocks in his life, he admitted this on a Bloomberg interview a couple years ago. I covered this in a prior video in the archives. If he is buying more gold, I think that signals that a lot of other smart money is also going to be buying more gold and gold stocks in the not too distant future. Finally, if you would like to help chip in for content and help keep these free videos free, you can sign up for my Patreon account. It is only $5 a month. As an added bonus, there is also over 150 articles, charts, and audio podcasts behind the paywall, including 4 new articles out in the last 2 weeks. Some of those took me hours and hours of research and writing to put out there, to get charts and find other articles to support my argument. So please, if you can afford to do so, it's only $5 a month. It's the cost of a bad cup of coffee, and that'll really make sure that I can focus on making content and doing research and continuing to make these free videos, because they're not really free. That's the truth. With the amount of time and effort that goes into these are not free.